contained in detail. Heads of income, it is already contained in the Income Tax Act. Rate of tax we come to know from the Finance Act. Who's to be taxed and which income is liable to be taxed are the important sections when we come to this the provisions, and there we'll be talking of section 4, 5 and 6. Now, what is income? Which income? Whom are we referring to when we say Indian? I mean, all these concepts we need to understand only then to have a clarity on what is being, how this tax is going to function. Now, let me come to the section wise. Let me finish off section 3 first, because it's a very small section, doesn't require much detailed discussion. So now, as far as section 3 is concerned, section 3 defines a previous year. Now, whenever I look at it, the first time when I studied tax, as I was saying in college, that was sometime in late 70s. 79, I started my articles. Since then, we have been reading about this concept of previous year. Honestly speaking, we have got so much used to using this particular concept of previous year and assessment year. But then when you objectively look at it, I mean, we have got so much used to it that we don't find it any peculiar. But then when I was specifically looked at from the perspective of today's seminar, I was really wondering, why did we name it as a previous year at all? Why there is a need to have a nomenclature which is previous year? Because previous means pichla wala. I mean the what came before this. So that is when we say previous. We could have definitely had a better nomenclature to refer to the year which we are saying. We could have easily said a tax year. And then why do we have 2 years at all? I mean, why do we have this concept of previous year and an assessment year at all? Now, today, as the law stands today, once this concept of previous year has been reduced to a financial year, to my mind, this concept of previous year and assessment year needs to be done away with. It is really not required today. We can have only 1 year, which can be tax year, and we can always refer to the year for which the tax is being levied. You levy it in the next year, or advance tax is paid in the year itself. But then the previous year, the nomenclature of previous year, because previous is a generic term, and previous is a generic term means it refers to what came before. So when we are saying that what happens in the earlier years, so we have what happened in the preceding years, preceding period, what happened in the earlier years, and then we have a previous year. So for the purpose of tax, we can't use the word previous year for the earlier years, and we need to distinguish when we are talking of which year are we referring to. But anyway, the concept here is that assessment year, the concept of assessment year is there, which is starting from 1st April every year. Now, this assessment year, the tax for the previous year has to be collected through advance tax and TDS of course, but then it is to be assessed in the subsequent year. That is a concept. So we are working on a 2-year kind of a concept where income of 1 year is assessed and the next year is known as the assessment year. Now, this particular concept had some relevance when previous years were not restricted only to financial years. And we used to have companies who used to have different previous years. During the entire financial year, we could have 30th June as ending. We used to have 31st December as ending and so on. So in those cases, the previous year had a relevance, but now it has practically lost its relevance. And if you look at the definitions, the manner in which it has been defined in the Act also, why Income Tax Act has become complicated is that we have not tried to remove all this redundancy which has come getting into the Act also. Now, previous year has been defined in section 3, and we also have it in clause 34 of section 2. Now, clause 34 of section 2, it says previous year means the previous year as defined in section 3. Now, I really fail to understand that why did we need to put this here and refer to section 3? Why we couldn't they take this definition here itself in section 2, clause 34? Or alternatively, let us not have it here at all once we have a special section defining it previous year. And then we have assessment year, which has been defined in clause 9 of section 2, which means the period of 12 months commencing on the first day of April every year. So now, anyway, so it is in the act, it remains. So we'll stick to that. And so the concept of previous year basically means the year for which the income is being assessed. And after the end of the previous year, the first day, 1st April onwards, it is termed as the assessment year. So it refers basically to only one income which is to be taxed, referring to both previous as well as assessment years. Now, any tax or fiscal legislation, the most important section is the charging section in that legislation. Now, as Mr. Sunil Garg had said in his opening remark, now section 4 is the most important section, because for levying any tax, you need to have a process. First of all, you need to have an authority under the Constitution to levy the tax. Then that Constitution, the authority which is there as per this Constitution, has to be legislated in the form of a law. And this law has to have a charging section first. And then based on this charging section, or to supplement this charging section, there has to be a machinery provision to compute this particular charge and to levy this charge from the subjects from whom this has to be collected. So, in case we remove section 4, the entire Income Tax Act finishes. I mean, there is no income tax till the time section 4 is not there. And section 4 is the section which triggers the entire gamut of levying of charge. And based on this section 4, there is computation provisions, there are machinery provisions. So all those provisions, basically the root of the section is, the root as far as Income Tax Act is concerned is section 4 of that. We don't need definition if there is no charge. Now when we look at it, because we are going section wise, so my endeavor was to bring the section also on the slide so that we are able to read it together. Now when we look at it, the basis of charge basically provides that the rate of tax, the tax is to be levied as per the rates provided in the Finance Act every year, in accordance with the provisions of the Income Tax Act 1961, in respect of total income of the previous year of every person. So now we have not the rate of tax, we already know. Computation has to be made in accordance with the provisions of the Income Tax Act 1961. So in respect of total income of the previous year of every person. Now, the word total income has been defined in clause 45 of section 2, which simply says that means the total amount of income referred to in section 5 computed in the manner laid down in this act. Now, the total income, so we'll be coming back to this concept of total income when we go to section 5. So here, the charge basically is that it is to be levied on the total income. Now, this power to levy tax comes as per the entry 82 of list 1 of 7th schedule of the Constitution of India, which empowers the central government to legislate to levy taxes on income. Now, income has also been defined in clause 24 of section 2, which is an inclusive definition of income which has been given. Now, my question here is that when we say entry 82 and the definition is given in 224, is the legislature at liberty to include any kind of income in 224 and levy tax on that? Would anybody like to give his opinion on this? I would love to hear my co-panelist here. I mean, Raj Chawla ji is a very educated person. I mean, he's a lawyer, company secretary. I think he's a CEO, of course, and I mean, he has possibly all the qualifications which you can have as far as this stream of commerce studies is concerned. And I think Sunil Garg ji has also had a fair amount of exposure on the constitutional provisions as well as the concept of income, because he mentioned that in his initial address, initial remarks. So would somebody like to throw light on this as to when we are talking of 224, the inclusive definition which is there in 224, is there any limitation which is there in 224 vis-a-vis entry 82 in the list 1 of the civil schedule? Would somebody like to comment on this? I'm sorry, I'm not able to see you. So,
no, sir, we are also waiting for the comments from the audience. Very good question, sir.
गर्ग साहब आपने शायद बोला है.
हाँ जी, मैं बोल रहा हूँ सर.
अरे वाह, गर्ग साहब आप बताइए सर, बिकॉज अगर ऑडियंस में से कुछ आता है तो ठीक है, नहीं तो आई वुड लाइक टू हियर यू ऑन दिस पर्टिकुलर थिंग बिफोर आई गो मोर इनटू दिस.
सर, जहां तक मैं समझता हूं कि कंसेप्ट ऑफ इनकम को by introducing deeming provisions and other in theory of income, because it has to be understood in the common parlance, जो inclusive definition है. तो मतलब एक तो मैं समझना चाह रहा हूँ कि जो आप कह रहे हैं कि जो एंट्री 82 में कहा इनकम को, और क्या 224 का इंटरप्ले क्या है सर?
Absolutely, Garg sahab. I mean, exactly this is what I'm trying to say. No, because what I was, I mean, you are at liberty to give your comments or views. I mean, you need not necessarily go by what I'm saying. I mean, you can share your thoughts on this. Absolutely fine with me.
No, sir, love to hear from you, sir.
Achha, okay. Now, to my mind, let me take up a specific clause. If we talk of section 28 clause 6a, now this is a clause which was introduced a couple of years back. Now the clause is that if I convert my inventory into a capital asset, then the fair market value of that particular inventory on the date of my conversion will be deemed to be my full value of will be deemed to be my consideration, and the difference would be treated as my income from business under section 28 clause 6a of the Act. Corresponding amendment has been made in the definition of income also under section 224. Now, let us understand the concept. ये हो क्या रहा है, हम क्या करने की कोशिश कर रहे हैं यहाँ पर. I would say one thing. I constructed a building. I'm a real estate builder. I'm a real estate developer. Now I constructed a building, a commercial building. Now somehow, because of the market scenario or whatever it is, I'm not able to sell that particular building. Now I said, yeah, I've done a wonderful job. So I take a call. Okay, now this particular building मेरे को बेचनी ही नहीं है. I'll make it as my corporate office. So one building which I had made with the objective to sell, which is a part of my inventory, which was a part of my stock and trade. This building I converted into a capital asset. I said, okay, I'm not selling this building. This is no longer my inventory. I have converted it into a fixed asset. This has become a capital asset for me. Now, this particular clause, section 28 clause 6a says that the fair market value of my inventory on the date of conversion, it will be deemed to be my business receipt. It's a part of my profit and gains, and my income would be computed accordingly. Now let me take you to section 45.2 also. Section 45.2 provided that a capital asset is converted into a stock in trade, then what is the mechanism for levying of tax? Now they said that if you convert your capital asset into a capital asset is converted into this stock in trade, then up to the date of conversion, on the date of conversion you'll take the fair market value. The difference between the cost of acquisition and fair market value would be treated as capital gains. Beyond that fair market value, if I sell that particular asset which has now become a stock in trade, this would be treated as my income from profit and gains, income under the head business and profession. But this would be liable to be taxed in the year in which I ultimately sell this particular asset. That means the year in which this asset is sold, only then this becomes taxable. Now, what is the rationale for this? Now, this was on a very sound footing. They said that, okay, you have been treating it as a capital asset. So you may need to do indexation. There is a lower rate of taxes there. It was a capital asset for 15 years. Now you convert it into inventory and you are selling it, which happens very frequently. This can happen in a number of cases. So now in such situation, the act was very well drafted. The policy was very well drafted there. They did not tax it in the year of conversion. They taxed it in the year in which I am ultimately selling that particular asset, and they have classified and they have distributed the entire gains into two parts: capital gains and business and profession. Now, but there was no corresponding reverse situation there in the enactment up till now. That means conversion of inventory into capital asset and then sale was never there in the enactment up till now. Now, let us understand why it was not there. It was not there because if I convert my inventory into capital asset, once I convert it into fixed asset or capital asset, I don't sell it. So I would not possibly sell it for years together. So they did not provide for any mechanism for that particular taxability, which they have brought into tax by including this in section 28 clause 6A. Now, my issue here is, some of you must have been feeling that we have digressed from the topic. Now, I'll come back to what we were discussing with Garg Sahab ke saath jo discussion ho raha tha. I'm coming back to that. Now, my question here is that we have made amendment to Income Tax Act, wherein we have said 28 clause 6A is taxable as income from business and profession. Correspondingly, an amendment has been made to 224 also. Now, my question is, how does this constitute an income, and how can this entry 82 provided in list 1 of the 7th schedule empower the central government to impose tax on this? Where is the income here in this particular case? Now, once I've converted my inventory into a capital asset, there is a settled principle of law that I cannot make profit from myself. Now, if I cannot make profit from myself, from whom am I making this particular profit that this amount becomes taxable? I would have understood this concept if here also they would have deferred the taxability to the year in which I have sold it. Let them say that ultimately this capital asset, the year in which it is sold, up till now my fair market value will be treated as a business income in that year, and the capital, the rest of the amount would be treated as a capital gain in that particular year. There was absolutely no problem in this provision. I would have accepted this principle, this law. But today, tell me one thing: just by making amendment to section 2 clause 24, by including everything as an income, does entry 82 permit such kind of a levy of tax on such kind of a thing, which is not an income at all? So my thing is, my take on this particular thing is that once the constitution is there and the constitution says taxes on income, then the Income Tax Act has to remain within that concept of income. Now, there are a number of rulings on this particular issue, wherein repeatedly the courts have said that entry 82 has to be very liberally construed, fully accepted. Yes, they say that powers have to be given to legislature to enact a law which can prevent evasion of income tax, and the court should not interfere in this particular power. And power to levy tax on income includes the enactment of laws which ensure that the tax on the income is not lost, and to legislate those laws. And one such ruling was in the case of Punjab Distilling Industries 57 ITR 1 Supreme Court, a very old ruling. But then the concept is that it has to be liberally construed. But then how liberally? Can we go beyond the concept of what being an income? Just because we make an amendment in 224, we put it in the statute. So is 224 the defining section which would tell me what is income, or can entry 82 be other than 224. This is what I was trying to say. Now, I would like to hear from you whether you would agree with what I'm saying or you do not agree.
सर एब्सोल्युटली एग्री। और इसमें हुआ भी क्या है, 28(6)(a) में तो जो आपने एग्जांपल दिया सर, वंडरफुल एग्जांपल। मान लीजिए बिल्डर ने 1 करोड़ की वो बिल्डिंग लैंड ली थी और उसने 2 करोड़ पे कंस्ट्रक्शन कॉस्ट किया, 3 करोड़ की कॉस्ट आई और स्टैम्प वैल्यू मान लो हो जाती है 15 करोड़ रुपए। और 28(6)(a) में क्या लिखा हुआ है कि जैसे वो कन्वर्ट करेगा उसको 12 करोड़ पे टैक्स देना है।
Absolutely.
12 करोड़ पे टैक्स देना है, उसे फेयर मार्केट वैल्यू पे देना है, जबकि उसकी कॉस्ट 3 करोड़ है, वो बेच नहीं रहा है लेकिन देना है। तो सर जहां तक मैं वही बात जो आपने पूछा था, जहाँ इंटरप्ले की बात है, मुझे जो लगा कि जो एंट्री 82 है उसमें इनकम की जनरल क्लॉज की डेफिनेशन है, लेकिन उन्होंने 224 को इनकम को जनरल क्लॉज के अलावा इतना इंक्लूसिव कर दिया और उसमें सारे डीमिंग प्रोविजन डालते चले जा रहे हैं। और कोर्ट ने भी कहा कि डीमिंग प्रोविजंस आर विद इन द Constitution of India, because of the reason the tax shouldn't be there should not be leakage of the taxes. That is the reason why more and more deeming provisions are coming into the picture. This is my take.
Absolutely, because I think the jurisprudence has also to look at from this particular perspective that it has to be liberally construed, no doubt, but then it cannot go beyond the spirit of income.
I mean,
income has not been defined under the Constitution. They only say tax